Good morning and welcome to the Breakfast Club. My name is Darren Hancock and I'm here today on September 28th, 2023 live. We're looking at gold and oil and oil, and we're looking at S&P 500 today, and we're also looking at tech. I already got a live trade in here. I took a live trade, but I'm up here right inside that little pocket. A little tiny fair value gap. I got in up here, aiming for obviously this liquidity down here at the lower fair value gaps. A couple of trades I did last night on S&P 500. I did a bunch of, remember that ridiculous trade I took yesterday that I was like, okay, that was a stupid trade. Took a $4,000 hit, I think it was, and got into some ridiculous stuff. Impulsive, I think it was. And I started taking some hits, and I was like, look, time to quit. Then went back into it with a cleaner mind and the losses I'd taken in here, and I'll show you what they are just so I'm kind of speaking my truth. I turned the bot on. The bot doesn't work too well in spread conditions when the spread's wide. So I realized I definitely can't use it in gold. I used it in gold up here, and I was losing like 20 bucks at a time. Not a good one. So the bot's better for tight spreads. That's good. So anyway, I was down 4,100 bucks. I made a bad trade. And I thought I got to try and find a way to get back on that. So show you guys that it is possible after you've had a nasty little drawdown. I had another trade here at 33, then 975, then 1380, 9. You can see them all in here. So I made 2 trades right before bedtime last night, which was kind of fun. This one here, when you look at the range here, I was in a way discount here. I was expecting price to bounce off of this little thing here and continue down. It started trading against me. So fortunately, in Canada, you're allowed to hedge off of this particular account. So I hedged and I looked for this higher time frame exit in a premium, and I left this on. So while I was going in drawdown in this direction, which I don't recommend you ever do, is hedge, because if you're wrong, you're going to get blown out on both sides. So I hedged to here, unloaded my position, which means that left this one under heavy drawdown. So that one was a $1,000 there, 1,200 bucks, and then it reversed as expected there. More hoped for there than expected. And then I wanted to get below this exit here and then reset myself, which was another 998. So overall, more of a lucky break than an actual using premium and discount arrays to kind of unload your position really quickly, which is pretty much where I went. So lucked out more than anything else there, but came through with a few to offset that really bad choice. So that one did not follow the rules, and there was consequently some huge drawdown. And then once you get back into the rules, you start getting all this kind of stuff. And then I kind of lucked out on this also. So anyway, we're up a big chunk of change. Still down overall because this is a demo account, and I beat the crap out of it with my bot. Started at 50 grand, went down to the 20s, or now I'm just pulling it back up slowly. Now I'm ironing out my bot, starting to realize where it works and where it doesn't work. Then yeah, all good. So I got a live trade on right now in tech. We're going short on tech, which is NASDAQ. So as soon as we get below this low here, I'll start taking out a portion here, close into that gap. It's also the fair value gap on the daily, so this could be just bouncing off of here and starting to run back up. I want to see it really start to push into here now and start to get down into these lower levels. Let's go back over here from, I finally found that one little notch I drew out the other day. I was kind of predicting at the end of a couple of days ago. I gave you this bottom out here in this fair value gap. So wicks did a little run through. But the bodies respect that. They came down and now they're shooting back up as predicted. So what logical level am I looking for? I'm looking for this last down close candle right here. So I'm looking to move back into this fair value gap on the upside. Yeah. If it breaks this old high here, then I'm looking for up here. If it doesn't, if it just gets back up to here, that's fine too. I've got, this was the call, and this is exactly what's happening right now. So if we see a further push up in GBP until the higher point there, which is the old low, perhaps we will reach for that. And I don't know why that damn alarm keeps going off. I can't find it. So Euro came down this morning, touched the top of the consolidation. Now we're getting a reaction off of it. We've come back into the order block, filled that little fair value gap in. So now I'm expecting this to push, continue on the upside. Yeah, it broke above the consolidation. Yep, that's an ideal entry point. Like you could get in right there and there and there. Stop loss would go below this candle right here. First portion, second portion, third portion, inside the fair value gap. That's where those are would be the positions I'll be looking for, but I'm not entirely convinced that Euro's on the turn yet. You check this against your American dollar and see where the American dollar's headed in terms of the its daily representations. Let me see if I got I was going to make sure I'm on my channel in case anybody's popped in to say hello. Let me see if I got I was going to make sure I'm on no, let's see what we got here. Nope, just little old me on the old channel today so far. That's good. That's fine. Let's look for. Look at the live charts here. There's some good stocks I'm looking at. Up here in Canada, we've got some great opportunities to get some high interest dividends stocks. Not stocks, ETFs. They're paying some really good dividends that are in a very big discount right now. Huge, huge discount. When you consider the real estate market, there's some really good ETFs that are still offering some good, like 10, 11% returns with monthly dividends. They're an extreme discount. They're actually striking new lows right now. Not touching them because we don't know where the real estate market's going to go right now with these interest rates. So kind of holding off on them. Banks, all that stuff can offer pretty decent returns on your money. If you're buying in banks, financials, layer in slowly. They could still take another hit. Look for this low in October. There's a seasonal tendency for October, November to have a low that occurs. So again, I like Australia and New Zealand around December time. They tend to make a nice little pop up in December. So we will be focusing on New Zealand dollar and Aussie dollar. Like this is New Zealand dollar still working its way down. So if we look for, see December, pop, and then this big run up into January. I like this. There's December 21st. See the rundown? Big run up. So this is what we're going to be looking for in December. So feel free to stick around. And here's the October low. Look at that October run all the way up into January last year. So if we have a nice little continuation on a rundown, October, we get a big order block like this. Break above it, come back into the body of it. Mind you, I'd like something cleaner. I'd like to see this kind of thing where you've got a break above market structure and a come back to the edge of the fair value gap. Get in on that. Or there's a double fair value gap here. We return into the middle of it. Stop loss would go way down here. It'd be on a daily, that's quite huge. But you want this gap to stay open. If this is a breakaway, and this would be a breakaway gap, you want to make sure that stays open for a run up for highs. And you'll see that it ran up and just cleaned out that high at the top there. Beautiful. So anyway, that's what we're looking for in New Zealand this year. I'm still looking for it to come back down in here. I think there was a daily, yeah, a little tiny price imbalance down there. Lots of liquidity sitting down here. They're not leaving that untouched before they start moving up to higher prices. So look for New Zealand dollar to run these lows, I think. Natural gas. Those of you who are interested, I still love natural gas. It's on the weekly, we're over $3 right now in Canada for the natural gas weekly play. And I have a play in American UNG right now, and that's looking good. So I'm looking for, again, break in structure here. We get above that, come back to it, get some support, and then get above this weekly. That's the next stepping stone. If we get above, up and through that, come back down on top of it, get some support, and then we're looking for these big gaps and stuff to fill. That's higher time frame weekly, though. That's a long perspective. I'm in this for a long play, a year, 2 years. That's a mega trade. Because we're at an extreme discount, I got in down in here. I think I got in near that fair value gap down in here, and I'm looking for a run up here. So natural gas is kind of a sleeping giant, I think. Just note that I said it, sleeping giant here, 725 on September 28th, 2023. I was calling this down here for up here. Look at that. That'll be almost double the money. Anyway, let's get back to, let's have a look at oil here. Look at that play we looked at yesterday. I was calling for this. I was in another chart. When I came back, it was above there. I thought, no, I've missed it. I wanted to get right in at that top of that inversion fair value gap. That's the rule. We get above, a body gets above it, you trade back to it, get in. Stop loss goes at the bottom of it, and off you go. And this would have been reaching for old highs up here, 92, and I was calling for $95, right? So we're at 93, 94, 93, 97. So it's still not done yet. We're still got more to go. So what's it coming back to? Well, here's a break-in structure to the downside, right? See this how, look at the tiny, let me just blow this up so you guys get a feel for what it is that you got to look for. You see this BISI here, buy side imbalance, sell side inefficiency. Again, my rule is that if I go below that fair value gap with a body, and look where the body is, it trades just below it, and then the next candle trades back into it, which is that blue line. The blue line represents the bottom of the fair value gap, so we trade through it. The next candle, open up, touch it, and then we leave. That's all it could take. That's all it can take, is just to come back into that inversion. That becomes an inversion fair value gap now. We go through it with a body, come back to it, and it could be even a small body like that, tag it, and leave. And this would be a precision entry. Precision entry, less your spread, of course. And once we break down below the swing point with a body, then we wait for a trade back into fair value to get short. Well, that's the 2022 model, and we haven't, we never got it. So if you would have got this piece here, now let's go back to the 15-minute and have a look at this on a 15-minute. Got a couple of minutes before the market's open here. See that? Body gets through it. It's really obvious on the 15-minute chart. There's your down close candle. If we have a fair value gap 1, fair value gap 2, I always like to go for fair value gap 2. Usually the top, middle, bottom, depends if it's going to be the gap, or I keep saying gap, if it's going to be the breakaway gap, creating the fair value gap on the breakaway gap on the exit for higher prices. But if it does run through it, then we're looking for, does the body of the candle get through it? Body doesn't get through it, so we get a reaction back. Where do we get a reaction back into? Little swing, last up close candle, tags it. That's before, that's on the swing. Tag it here. Then we start to run down. So now we're kind of stuck inside this little gap, fair value gap in here. I'm just going to call them BISSIes, BISSI and SIBI. So hopefully you'll get an idea of fair value gap, BISSI. We're inside the BISSI. And then all of a sudden we get a big body break right through it. Okay, so now do we have support up behind it and come back down? Well, there's another fair value gap or BISSI here. We body breaks through it big time. Next candle opens right here, trades back to the line, bang, and you get short. So there's your entry for the oil. That's what you're looking, that's just the setup you look for, is a break in structure to the downside, fair value gap, trade back to it. In this case, you would never have got in if you use that model, but I'm just trying to show you how a lot of the stuff we've been talking about since we started doing this thing is that inversion fair value gap. Can you get in on it and get short on it? So wait for the inversion to happen. So that becomes an inversion gap the moment we get below it, and then come back into it. It was just a straight BISSI. Come back for a fill and maybe touch that, bounced around in here a little bit, drove through it, wait for the candle to end. You got a body, great. Wait for the entry to come back into it, right there. Or wait for your 2022 model, which is wait for this candle to finish. So if this would have gone up here, stopped there, and ended there, that creates the fair value gap, which is break-in structure. Get back into it, get short. If you were waiting for that, you wouldn't have got in. But the keen eye would have seen this as an inversion gap, and the moment you get back into that inversion gap, you had one opportunity here, and the last opportunity with absolute precision was right there, and then you're off to the races. You're aiming for first low, and I guess now we're looking for this SIBI, or sorry, BISSI here, which we've already hit already. And then we're looking for a return to the inversion fair value gap that we mentioned yesterday that started this whole thing off. So let's kind of zoom out a little bit so you get an idea of what that looks like. So we're still aiming for down here. Okay. Okay. Made some money off of my live account. It's good. All right. Yeah, so we're looking for downside push here on oil. If we get into this inversion fair value gap again, let's just make sure that you keep a good eye on where you think this thing is going to, let me zoom out a bit more. That inversion fair value, I think it was on a 4 hour. No, where was it? Hour? Yeah, it was the hourly. So that's the hourly inversion fair value gap. We went up, tagged it. So we're looking for this to extend. Let me go here, make sure that's the right spot. Yeah. So we're looking for my little. There we go. That's a magnetic click. So look for this. If we actually drive through this, look for an old high. These old highs to get hit again. Right down here. So it would come through that inversion gap. Tag these old highs. This becomes the parent breaker that big wants to run down below here. So watch this to kind of hold price. This candle here. Which, if you draw that one out all the way out to here, that is also the fulfill of this fair value gap BISI. And I do love my fib tool. Let me change this settings on here because this looked terrible for like a nice dark blue. Levels. We've got 75, 50, 25. Let's add the 70 level. 0.70. That will be 70% OTE, baby. Okay, so there's the 70% OTE. Optimum trade entries. Oh, look, that lines up right nicely right there. So, can you imagine, hey? If we pushed all the way down into a discount range, 62% fills our fair value gap. Okay. 62% fills that. And 70% brings us back to the top of the fair value gap. Look at that. 75% fills our lower one. And 79 is... So look, if you're looking for objectives, look at this objective here. Look at this objective here. Look at this objective here. And look at that objective right there when I said the old highs, even if it returns back to 50%. So watch these. I'm going to leave this up here because we're going to watch how this progresses today. And we'll look at these levels that if you were smart money and you're reaching for discount inside a range that you've created since the last day, and you're looking to come back into this consolidation or 50% of that consolidation, what are we lining up with? What PD arrays overlap these key levels inside this big range that we've just showed you right here? So here she comes on the run with a burger and a bun. Now you guys probably don't remember that from the Flintstones. But look at this. We have a nice little pump down right into the fair value gap, right into the fair value gap on the daily, fulfilled, tagged it perfectly. Also inside this one here. And we're looking at 738. Look at that, Phil. Wow. Now you look at this on the 5-minute, and this people who are into retail will see tweezers here. Look at these tweezers. And look at, you want to see precision, folks. I want to show you this. Look at this. Tag perfectly. What is that? Why would it stop randomly there? When the fair value gap's here and there's a little piece over here, is the higher time frame fair value gap. People who think this is just all random are just so full of shit. You're not looking at this is algorithmically driven. I don't care what anybody says. It's algorithmically driven. This is not some random two little prices that ran down. That is precision inside a daily fair value gap. Inside a daily fair value gap. So if you can't see that there's absolute precision in the markets, then you're in the wrong place, man. You're in the wrong place. I'm trying to show you some key levels here. That is super, super precise. I love it. Because it's up and down, I've already out of my life trading this thing. Now, can we run down and drive through this? Absolutely. Do we have a higher time frame objective we're aiming for? Weekly. Remember the weekly? 2 weekly objectives. And we have a huge weekly one from there. What's this one looking at? Oh, that's daily. Daily is overlapping the weekly here. So that is a daily from there to there. So if I took a daily candle or daily block, and I'm just going to draw it in here. You'll see how they overlap the weekly. And we know we've got a downside objective we're aiming for. Next is looking at this candle here, looking at the threshold, the mean threshold of this candle. And the mean threshold was hit perfectly yesterday. Now, are we reaching for that again today? I think we have more downside push. So I'll move my little precise button out of the way here, and we're going to head down into here, because if we're looking at the overlap. Oh, was this a daily here I showed? Oh, that's that one. We haven't gone down into this this guy here yet. Okay, so below that is the weekly stuff. Hi. Well, that's a real cool name you got there, my friend. 10. You've got a really cool name, my brother. Unless that's a lady or somebody else. I hope you get to see you're enjoying some stuff here, 10. We're showing some serious precision today, my friend. Serious precision. Fair value. Come on, now all you want to see is this start to really get some legs here. We want to see, now what I'd like to see, if you're looking at trying to get in on something like this, you look at this fair value here, this BISI. Okay, we get a body that gets below this right here. We want to see that start to lock on to this bottom half of this and then start driving down for lower prices. So keep your eyes on this area right here. This guy right there on the hourly, and I'm going to turn him into a little yellow one so you can see it quite bright and clean right there. Magnetically locking on. So we got a body that breaks down below this. If we're following our rules, which is kind of looking for new ways for hi, how's it going? Yeah, there might be a little lag in my video to you guys receiving my stuff here, which is fine. Okay, it's showing it. So we want to see this return to here. And we're still looking at, 7:44 a.m. in Canada time. It's like 9:45 American time. So New York open. So if we see this breakthrough, two things we want to look for. One, return to the bottom of this BISI right here to get short. Or if we get a breakdown with a big body through here and we work our way back into the bottom of the BISI on the daily, then we want to get short and we're going to aim for our down here. This is our first objective. So kind of keep this in mind, because right now we're stuck in this candle and then you've got the threshold of that candle yet. So I'd like to see it bust through there, come back up and get going. On the daily or the hourly, we want to see a break in structure right to the downside, and ideally this is the kind of thing you want to see. Is you want to see a break in structure to the downside, come back up, fill a fair value gap, and keep moving. In this case, earlier this morning, or yesterday, late yesterday, it ran its old highs out. That's late. We don't mess around with late in the day. So inversion fair value gap right here. Let's see what happens. If there's anything specific you guys want me to look at, by all means, type it up in the comment section, and I'll go have a look at that. Kind of give you some a rundown on it if you like. Okay, these were the trades I did last night. Again, I was talking about that this morning. If you were around, I hedged. I got off of here and I thought I'm going to continue down, and it started trading against me. So then I hedged it. I went opposite direction. One went underwater, and then I aimed for this objective up here. Got that objective. Now this one is underwater. So I offset some of the losses I was taking here to here, and then it came down and I was just aiming to get out just below this low here. So I kind of set that up before I went to bed last night, and woke up this morning and saw that it had panned out. So that was more luck than skill. Okay, who said it works? Who said it? Who said it? Oh, who said it is the guy. How EU or GU looking? EU or GU? Well, that's Euro. What's EU and GU? And can I get that on here? Let's look up here. Can I get that on here? Let's look for a new chart. EU or GU? Like Euro? Are you talking about Euro? Who said it? You're talking about, oh yeah, okay, Euro and USG. Okay, I got you. Gotcha. All right, so GBP. This is the one where I was calling the other day, looking for that bottom out right there in the British pound. I was looking for that to kind of bottom out and then reverse. That was kind of the prediction I was giving, and it's not following this exact track, but was just saying it's going to head down and then it's going to pop back up again. And so far it's popped down. It reacted off of this fair value gap. We had a little wick go through, and remember, wicks always do the damage. Oh, you don't do Forex pairs? Yeah, I do Forex pairs. I got lots of Forex pairs. I used to trade Euro all the time. I love Euro. I'll jump back and forth. If I see a great opportunity to get in somewhere, I'll take it. Doesn't matter what's in. I'll take gold, currencies, oil. This morning I was talking about NASDAQ, or sorry, the Australian New Zealand dollars. And those, you guys make sure you stick around for New Zealand dollar and Australian dollar in December. This is the one I really like the most for kind of getting a reversal, getting a pop-up in a seasonal tendency. Australian and New Zealand dollars tend to do little pumps on December. So we'll go into those really light, but I'll look for a reversal there. I also trade natural gas. I trade whatever I see. I'm a technical analysis, so I will look at charts. I don't care what it is. Stocks. I got stocks that I trade just on straight technical analysis because I believe it's all algorithmically driven. So this is your GBP, and we're looking for, here's some places for you to look at. Who said it? I love that name. Who said it? So you're kind of looking for this right here. So kind of keep your eyes on this piece. Let me get a decent line on here so you guys can see what it looks like. Kind of like that. So who said it? There you go. You're looking for the potential. It's just right in this little tiny one there. Probably just hit it now. So if we're reacting off this and now we continue down, you're looking for downside objectives like here, this whole BISI here, price imbalance here, when you just see wicks. And you're looking for that to run down further into here and here. But right now, if we do get a bit of a retracement, there's a little tiny guy sitting right in here. Right there to there. And see how we hit it? Let me just draw this. You're probably staring at your screens really hard here. See how we ran inside it? So that becomes a fair value gap. We're coming back, so that's a SIBI. We'll come back in and fill it, which we haven't quite filled it yet. But you come back in, fill that, and then if we decide that this is a reversal, let's say this was a reversal, we would get on top of that and We're looking for a stepping stone to drive up to higher prices on the daily. Okay, so that's where you're looking at for your GBP. So look for that one. And this one, is this one going to hold price right now? Are we going to get on top of it and start pushing up further? So you look for this to turn into an inversion fair value gap. Now that we've filled it and we come back, do we find that we get some support on top of it to start running up? Let's kind of look at those. There's also a little tiny price imbalance just below it. So we may even come up on top of that to get legs up. And let's look at Euro. We were looking at this one this morning. This was the breakout. There's consolidation. We have a breakout with a fair value gap. You return inside that fair value gap on your BISI. The top, middle, and bottom are your three areas that you look for. So if you enter here, here, and here, your stop loss goes down here. You would have been all the way back to the top of the fair value, the top of the consolidation here, which is a typical place that price likes to come back to. When you see consolidations, always think the top, the equal highs, and 50% of the range of that. So if you took the bottom to the top, take a 50% tool on your fib. If that's my range, right? I would take the top of that one right there. Oops. It's right there. Here and here. That's the range. So look what it did. It came right back to the top of the range. Hit it and then left. So that's what you're kind of looking for when you're looking at consolidation or breakout. Don't try to run and say, I missed it. Wait. This is all, a lot of sentiment will drive this up. We're also looking at this fair value gap SIBI over on this side, and see how the body breaks through it. Well, that's where you start to say, I want to get leverage on top of it, middle it, and the bottom of it. And in this case, it actually, the body came through, but we still have this one here, the range that we've just created to the outside. We want to look at, say, how is this range that's just created on the after the breakout, this range on the breakout, look for a discount area that supports price. So here's the breakout area. Look at this. Anything above this is premium, anything below it is discount. When you're in a premium, you want to come back, get discount prices, and anything below 50%, which is right on the close of that. So you could even put your orders right in on the 50% line, and then let that run up for higher prices. So either way, you've got multiple setups looking for these fair value gaps to fill and find support at them. So because this is the range and we have this consolidation, we've returned to the consolidation. I showed you that. Let's like precise right across the top there. Stop loss goes here. That's how tight your stop loss would be. Let me get rid of this for you here. Your stop loss would be like, if this is going to be a solid trade, that would be 13 pips. That's a pretty solid stop loss. On Euro right now, on the 5 minute, there is so much chop that I'm not sure where the direction is to go. So if you look at, if you're in a lot of chop and we're still before 10 o'clock, don't touch it, man. Don't touch it. So we're looking at, you said on Euro 5 minute. Let's have a look at Euro 5 minute. So look at the hourly. Where's our bias? Who said it? Who said it? Where's the bias? The bias, now that we've come down into here, right? We've got support at this and we're starting to push up, higher time frame. So you're looking for a run above this high here. Not very many pips to log for. It's 9. You're aiming for here, and then there's not a lot up here so you're looking for here, and then that pocket of cash up there. There's liquidity resting above these equal highs here, and there's a pool of liquidity here, and also inside that SIBI over here. So you're looking for upside prices. So on the 5 minute, it probably looks like chop chop. Oh yeah, that's bouncing around. But we know this was not chop, as it was returning to a higher time frame objective. Once you see that objective, then you just ride this out. This 5 minute stuff you're looking at is chop. Don't get lost in the trees, my friend. Don't get lost in the trees. What was the purpose of all this that looks like chop? It was the higher time frame premise to come down to the top of the consolidation. So now let's look at this here. So you've got your fair value gap here, your SIBI. We've got a body breaking up. Now we've come down, traded inside it right here. We always cut through candles. Don't buy into that crap that you have to only take the last previous candle. You got to get all the way through it. Doesn't he say macros start at 10 minutes of, and the 5 minute candles count towards fair value gaps? Usually he says his quote was a 30-second or 1 minute is where you'll find your setup at 10 o'clock. So you can also find SIBIs on, or the macro you're talking about is the silver bullet entry, correct? You said it? That's the one you're looking for, right? The silver bullet entry. The silver bullet entry can be, and you have to really look at it at the beginning of the hour. Wait for the first silver bullet entry to happen. And he talks about it. The first macro begins in 1 minute. So right now there's chop. I think there's still more upside objective on the higher time frame. That's your directional bias. So if you go down to the 1 minute, he says 30-second or 1 minute, the first one that you find after 10 o'clock is your bias. Silver bullet entry, yeah. So you're looking for the silver bullet. So let's look for a silver bullet on Euro then. Silver bullet entry. Okay, so we're sitting at 8 o'clock now, right? So this is the 10 o'clock. So we could run this, turn around, and come back down again. Now he says the first, you can even catch those ones that are just before the 10 o'clock. Remember he was saying from 9:30 to 10, silver bullet entries can happen inside that 9:30 till 10 o'clock range. So look for, so here's your 10 o'clock. I like this guy here. So this is the one that happens just before there's a silver bullet, or there would be a fair value gap formed, come back, tag the edge of it, drive up for this price up here. So you want to see one form in here now, or drive all the way back down, grab this guy here, because we're looking at, I like to see a little range that created, and I want to see a discount in there. I want to get a discount price. Is there a BISI that I can get on top of to get out of here and start running this up? So I'm going to drop the old bot in here, and I'm going to try this out just so the bot will find a and I'm just going to go okay, so this is going to find the first silver bullet entry right there. Boom. All right, so that's the first silver bullet before it hits that high. So it looks like fair value gap at 954. 954. You're looking at that guy there. Yeah. So this could be it right here because it's 7 o'clock, 1700, which is the 10 o'clock one. So if we run back down into this, this is technically the first silver bullet entry that occurs after 10 o'clock. But see, we're right near the top. See, 10 o'clock tends to run out an old high and then reverse directions. So I've cut the leverage down on the bot quite significantly because usually I add these up and they make a total of 1% of my account or 1/4% each. So you get 4 entries. So you're kind of looking for this and then 105.74. 574 is up there. So my scale out will be the first one up here. 574. Yeah, that's the first scale out up there. Yeah, it just popped above it. So we might be running down into this. Stop loss goes below here. If you're wrong, that's your next entry. I'm not crazy about entering in right at the tops of marketplaces, because usually if you run above and come back down, right? But I want to see a body. If I see a body get above that and it creates that fair value gap, then you come back into it. Then I'm good for it. But these little tiny pops. Let's see how that little wick. That was the call on that one. Is the high is 0.5548, and this is 0.5549. So it was 1 pipette above that. Now if this one breaks above that one, so 105.510 is the entry. Yeah, that's any one of those 3 entry points. You could take stop loss goes here. So I've got 3 entries here. I've got one here. That's called a wild card entry. That's nothing that Michael teaches. That's just something I've added to my own bot to guarantee me an entry off of here, because sometimes this becomes a fair value breakaway gap and you never get filled and it just takes off. So that's what my wildcard entry is, and it's the lowest leverage. The leverage increases the closer I get to my fair value gap, and that whole total will be no more than whatever percentage I set it at. Okay, so we just popped another one on there. That's right at the entry. What bot are you using to find the fair value gaps? I made this bot myself. I designed it. So there's your entry. That's your silver bullet entry right there. And it will start to unload the first position up here. Not a fan of MT5 charts. Yeah, no, me neither. But I couldn't build a bot. And the what do they call it? Pine needle or something like that. I can't. I don't know what the heck that Pine script, I think it's called. Yeah, it's called Pine script or something for trading view, and I don't know how to program in Pine script, so mine's all on FX Dreamer. So anyway, that's the build. So we'll see if this works. But I agree with you. The MT4 was archaic. MT5 is not that much better. Remember our upside bias. We're more biased on the upside for Euro right now. Yeah, if you don't know how to program the FX Dreamer is the one. It took me quite a while to figure it out. I watched a lot of videos. There's a lot of really talented people online to do that kind of stuff, and they're really smart, really talented people. So I kind of just watch what they do and just study and practice. And there's a guy out of New Zealand that I study under as well. It's called Trading Nut, and he gets a free shout out here. The Trading Nut. He's got a whole online school you can go to. It's rather expensive, but he also has a club that you can join every week, and they will actually design. And so if you have a bot idea, he designs. You show him the idea you want, and he'll actually build it out and teach you how to do it in front of everybody. So that guy's a good resource to go to as well. So we're looking for this guy to clear out the first little pop up here, and I think, yeah, right there. Now I've moved to break even. So that's a zero stress trade right now. Both of these are zero stress trades. So I've taken off a percentage off up there. The bot automatically takes a percentage up here, and it will move everything to break even. So if this turned around against me here, I don't care. It made some money now. So that first guy in that higher risk one, he's right there. So if it goes to break even, which it probably will tag it, close him out. This guy here, he's break even. See, he's out. Done. Now it comes back and takes that guy out. I don't care. I made a bit of money off of each one of those. So if it turns around and booked it all the way through here now, I would lose on those two. Says, yeah, Pine script, I don't know, my targeting 1.5742 on this long euro position. You're targeting 1.5742, 1.57457. Oh, you're up there. Hang a second. Let's have a look at where he's aiming for. 1742. Is this high here? 15742. Oh yeah, you're up there. Yeah, that's a good place. There's a nice pool of liquidity up there. Good. Who said? I like it, man. I like where you're pointing. I like the direction of your flow, brother. I like the direction of your flow. So anyway, so our bot is looking for another opportunity to look for another fair value gap to jump in on. So I'm going to shut it down. I'm going to turn off my buys and my sells, and I'm just going to keep that last trade on. Good man. Good target, brother. That's a good target you're aiming for. I like it. So this is a zero stress trade now. Zero stress trade. And my next point I'm looking for is a 5619. My bot's looking for a 5619. 5619. 5619. Where's the 5619? Five, 619. This guy here. He's looking for there, then you'll look up there. Got it. It was Wednesdays before the downward spiral yesterday at 3:30 Eastern time. Yep, I like it. You want to see this order block hold. Hold price. So far it looks like it is. Good. Turn off my cells. Yeah, I don't like to see this waffling around here a heck of a lot. I like to see this get some legs now. Order blocks holding price, get some legs, start driving up. Here we go. Go, baby, go. Where was your buy-in? Did you buy in right in this silver bullet? Who said, did you get that? Did you get right in on that entry point right there? Five 5517. 5517. Oh, you're right. You and me are all paired up, my friend. That's exactly where I got in. Good. Now, did you set that as a pre-order, or did you actually hit the button right when the finger came down and tagged it? Are you like one of those lightning fast people that got it right on the drop in? Back to this order block again. This is the whole point about paying the trader, right? There, I just got taken out. That's why you pay yourself above these highs. So now I had a chance to collect at least 10% off of each one of those trades that went through. Now I can get, if it comes down into here, I'll go one more time on that. And I'm not going to go with that. I'll go with one of these. If it just pops below that, right there. And stop loss will go down here. So that's the other one. body got below it, I'm out. Do I get a chance to make a little piece of cash off of that, or is it going to come down and take me out? Or below that inversion fair value, it becomes an inversion fair value gap now, right? So does this come back to my price I can close out before driving through? So that was the other entry, which was the fill of that, right? But see, now we've got a body that gets below that. So that to me is more heavy. Now we got a body, yeah, it just took me out there. So that was the hint right there. See how that I was talking about that this morning, about when you see this, it becomes an inversion fair value gap now. It starts to come, you drop below it with a body, then you come back, you hit it right there, and then you get short. So as soon as I was kind of waiting to describe that to you, but the body right here, see how the body and that fair value gap traded below it, then what did it do? It stopped. That's the hint that I'm going to keep going down. So it popped up right into the inversion, tagged it, and came through and took us out. So now we've got a sell side situation, and this is at 1717. So this is where you turn on the sell side. And you look for entries in here for a short. And if you're, remember we did say we're going to go higher, right? Let's just double check our direction. Yeah, see, there's no break in market structure here other than just this entry here, back down. We could be just coming up to that order block in here. I'm reacting off of it. So if we haven't got a huge bias, and this order block hasn't, it's just barely got validated right there. Right? I like to see bodies get above these things and come back into them. So I would like to see this. I'm going to wait. We're just going to sit on this and wait. I'd like to see this. I'd like to see that come back down into here and then start pushing up. If this pushes all the way through now, then great. Then that was one of those pieces that you're glad you took a little piece off on the lower time frames. But if it does come back into here, sweet, oh, look at that. It lines up perfectly with the fill of that little guy there. So if this is the short now, I'm just going to do a little low, just out of curiosity. I'm going to go a little counter trend here. No, I'm not. I'm just going to say paper trade. Paper trade right here. We're going to paper trade that right there. Stop losses there. And I'm looking to come back down into here. Taking out. Just out to ask you if you went back in. Okay, back in with you. Lower, but lower at the same target. So look at here, if you're in, so watch, this is the, we have a break in structure here, down, fair value gap. So watch out for this to hold and support price. So if you're in, be careful. If this pushes up, great. You're in, you're doing well. But watch this threshold of that candle. If that provides support and turns around and comes back down again, you'll know that. Remember I was telling you earlier about I hate being in on these highs close to 10 o'clock when it runs 10 o'clock and run the high. Well, it ran the high here and then can turn around and come all the way back down again. So this is the tendency that you have if your long biased doesn't hold. Look at how this is holding price right off of that breaker right there. Last up close candle before a run below some lows. So Be careful with your, okay, you're out, good. I went in after you and got out, but my stop was a little lower. Okay, good, good. So not just wait, you know, kind of bide your time, right? Wait till you see something that is like this. This to me is if that threshold, we lose, if we close above that threshold, then chances are we're going to go higher. And I wouldn't jump in on that until I see a significant run above this high, like a body, fair value gap, get in on it. So this is the short. And I'll let you in on a little secret that Michael hasn't taught, but I've discovered over time, is this 1700, it's 10 o'clock. Don't take the very first fair value gap. Look for 1712 to 1717 for the setup. Give the first 10 to 15 minutes inside that range. 10 to 15 minutes for the silver bullet to set up. Because sometimes you'll get one like this, and then you'll get one like this. This was right at 1700 or 10 o'clock. And this one didn't come in till 1717. Boom. So there's the threshold. Are we going to keep pushing for up prices? And don't beat yourself up if this runs, by the way. Don't stress out. Okay, I went in after you. Okay, so question. Our original trade, we used the fair value gap that had started at 10. Now do we find another that has started after 10? I've been doing that. Okay, good. We wait for a decent, so now we've got one here and we've got one here. So what do? Our bias is up higher, right? For the hourly, we said bias is higher. We're aiming for you were aiming for your liquidity up here, which I think is still a valid place. But there's nothing on the hourly to get in. 30-minute. What do we see on the 30-minute? There's nothing on the 30-minute. I want to see this get back into here. 15-minute. You could even see right down, look at this inversion one here. We went up, we're through it with a body now, we have come back to the top, we haven't come back inside that. I'd like to see a big dig down into here, but we may not get it. Let's look at the 5-minute. There's a little pocket right here. Yeah, this is a little choppy. Do you have, I've been back testing with Forex Play. Nope, always today. Do you trade this time every day? Yeah. Yeah, every day I'm on I usually start my show around 7:30 and I go to around 9:30 or so, usually a couple hours, or if I've done my trade, made some decent trades, then I'll get out and go for a walk, go exercise. Watch for this area here. I'll put a little pocket right there. So we did trade above, we did close above that threshold, but now we're pulling back down into that little range. Too much chop for me. I like clean price action. I trade every day. The 950 fair value gap hasn't been tapped yet. Looks like mid 105.442. 105.442. Yeah, right there. That dot represents the middle of that 5-minute fair value gap. But you see right now we're inside this breaker. We've already hit through the threshold, which not a really solid thing. We have this, it depends on if you want to believe this as a island reversal, right? Little pocket fair value gap on each side, and we want to see it push through, come back into the 50% of that range, leave a piece open, or leave the lower piece open, the lower one open. Oops, I have all my cells on. Bot just took a trade. I forgot I had my sell side on. So now my bot's in a, it looked for this and said, I'm taking that. So you're right, it hasn't been tapped yet. So if I look for, because this is my entry here, I'll take a piece off right there. So my bot jumped in on a, I didn't see this, but the bot saw it, took it. So it put some stops above that. All right, now it's jumping in on some trades. We always trade demo here, so I'm not crazy. I'm going to turn off the last one, get rid of the last one, and I'm going to turn off all future ones. So that came up and just tagged the other one. $9.55. Now you want to see some big bold push down in here now. There you go. That's that fill. Take off 10%. Feed the wolf. Ow! Feed the wolf. Feed the wolf. Ow! Feed the wolf. See, I can take out portions of my trade. You'll see these click down here. I can take percentages off. Ow! Feed the wolf. I just took a bunch of percentages out of here. No, I see the bot would find this as another fair value gap and take that too. No, what's it looking for here? Feed the wolf. Ow! Ow! I'm taking percentages like crazy out of that now. Oh yeah. There you go. Ow! Feed the wolf. Ow! Feed the wolf. I took a couple more out of there. This guy's gonna hit. Oh, look, they're all breaking even now. Yeah. And I kept paying myself along the way. Ow! Ow! Keep feeding myself. Ow! These guys are all break even now. They've already been scaled out a chunk over here. All right, now we have a break in structure with a body. A new fair value gap is forming. Now these all these trades are break even, so I turn my bot on again and wait for it to find another set of oh, it's coming back and filling it already. Oh well, turn that off. I want this to be the inversion here right now. Eat, eat, eat. Yeah, that's right. So we're looking for this. Who said it? We're looking for this right here for a inversion. We've come through it. Nice. Come back to it. Do we get some support at that? And we can run all the way up to taking me out on that one. Just in there. We want to see it. That thing hold price. Or is it going to push all the way through? Take some more. Feed the wolf. Ow! Ow! Keep feeding the wolf. Feeds the beast. There's not much left on those. Close the trades now. Close my trades. There, we took some money out. We fed ourselves on the way down. Closed. Now, is this just filling in this one? And going short again? So that paper trade, albeit painful, did work out. Now look at this one here. That's the threshold we want to hold now. So that's your entry right there. Oh, this thing's jumping around. Now does that threshold hold? Paper only. All this feeding, pepperoni sounds like pepperoni. Threshold is holding, or is it going to let it go? Now see how the body's got above this already? I wouldn't even play with that because you're between this guy here and this guy here. So if you're coming back to feed this, to get short off of that, that's fine. But if you're using this as an inversion fair value gap because you want to stay short, then the rule is you should have been out by that point where it closed because your body is above now. So that doesn't give that much support to go short. But if you're looking for this to come back in, I'd like to have seen that stay open, create a gap, a breakaway gap. But it didn't. Came back for a full fill and into the threshold. Now, one little rule I like to have is that if it passes through 3 PDRAs at one time in one pass, I wouldn't touch it. Just because that's too aggressive for me. 1 or 2 at most. If it reaches to the third one, I try to stay out of that. But here's your idea that we just talked about that threshold. That needs to hold price. Stop loss would be like right here. So you're really tight with your trade if you're in on that one to go short. At 10:31. Yep. Wait till 5 minutes after the swing on the bottom. It's either the swing on the bottom or 5 minutes after. That's also another time-based bias that I've developed over time. See that? 35, 16:35, 5 minutes after. Wait for the 5, anywhere from the first 30 to 5 minutes after 30, after the bottom of the minute or the bottom of the hour. Wait for that setup to happen. So I look for a setup in here now for a short. So you look for a SIBI to happen. So I'm going to see this thing get eaten through, come back up, find some support at it, and then go short. If not, see this, come back into it right there and push through. Now if this starts to run up, right there is your entry for a long. So like Michael says, if you can argue both sides of the equation, like if you can argue this to go up above these highs now, and you can argue for this to continue off that breaker to go down, which we can, don't touch it. Wait for cleaner entries, right? Wait for way cleaner entries. Does that make sense to you? Is that what you think too? Who said it? Do you agree with that analysis? We could argue both sides of this right now. So we just kind of, it looks choppy here now, right? This is a high resistance situation. So you sit on your thumbs or your hands. Depends on what you like, I suppose. See how this inversion gap right here, we've come up. Oh, sorry, it's not inversion. That's just a regular fair value gap. We've come up and we filled it, the SIBI, and now we're banging around inside it. So it's trying to figure out what the hell it wants to do from here. So if we run out of PD arrays, this guy here and this guy here, this is the breaker. This is just a regular order block. We've come back down. We're stuck between that one and that one. So when you start running out of PD arrays, it has to extend and reach for a new liquidity and start developing bigger outside of this little range that's created inside here. We're getting smaller now. We're compressing. Now we're waiting for a breakout. 950 fair value gap still hasn't filled, so I'm seeing it as fading down there to fill that from where we are right now. Yeah, down in here. That was the 5 minute one, right? But this is a lot of chop on the 1 minute. Not clean at all. But you're right, this could fade all the way down into here. And we're looking for, do we close above the threshold? Excuse me. And start reaching for rejection blocks. You got this little pocket here now. We're just banging on the top of it. Who else we got in here? It says we got 3 people watching, but it's just you and me chatting, my friend. Whoever else is in here, just pop in, say hi. We are a friendly place, man. No egos here. If we lose together. Or I'll lose in front of you, I don't care. But if we talk through the rules and you talk through what it is your setup, the setup that you're looking for, you'll usually stay more germane with your thinking if you kind of just talk it out too. So you're more than welcome to, anybody's welcome to have a voice here. And usually I have a Skype I go to on the Breakfast Club. And if you guys stick around long enough, you get access to that, then you can actually talk. You don't have to worry about typing all the time. You can just, we can just chat it out. You kind of talk about your thing, get on the Breakfast Club, get your voice heard, get out there. If not, and you're happy to just type away on the side, I'm cool with that too. Okay, that is just back and forth, back and forth. All right. Keep an eye on that one. I'm just going to go down into these these other asset classes here and see. Yeah, I was looking for this to come back into our inversion fair value gap. We were calling this earlier. And that's good. So that's still coming down. If you're trading this on the 1 minute, you are going to get beat up. Look at that, whipping back and forth. It is still working its way down, but that'll run back on you for sure. If you're looking at that on a 1 minute, that's going to be pretty choppy. So you're down. You'd have to be holding this quite well with confidence to get back down to this inversion fair value gap here. Gold. Oh my goodness, gold. I was in this morning as well. Took a little piece out, but look where gold's sitting. I've been calling gold down all week. I've been calling gold down, and she took a nice little U-Haul to Missouri. This sucker left town, man. It's been sideways and then just left now. It's great. I've been calling this baby down, down, and down some more. So there's your daily. There's another weekly here. Man, this is all daily here inside the weekly as well. So we're still looking for down prices, which is great because there's an ETF out there that gives really good returns on monthly income. And we're looking for a seasonal low, Keep an eye on your seasonal tendencies, ladies and gentlemen. Your seasonal tendencies. So gold's looking good for me. I like this area. We're digging into the next. We ate through that whole 1 week. When I was talking about it up here, last week, I was talking about this run that started getting down below here. And we came back inside it. That's when I started calling this down. So we're looking for way more prices down here. I was calling the 1800s. So now I'm looking down into the mid to low 1800s this week. If we end up continuing down here and push for some really big runs down now on gold, we're looking for a fill way down here at, I'm going to move my little blocks here now so you get an idea where these are. 1830. Euro's testing the high. All right, I'll be right there in a sec. Let me just finish up with these guys. This is just chop. 500 and tech. Chop, 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 chop. Look at that whip saw back and forth on the hourly. Look at that on the minute. I bet you that just looks like shit. Back. Inversion, body breaks through, support, 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 and off you go. So there's a nice little inversion fair value gap working exactly as it should. Also this fair value gap here, we dig into it, found some support at it, and then left. That would have been a beautiful run had we been on that one 10 minutes ago, but that's okay. We're looking at Euro. Let's get back to Euro and see what's going on here. Oh, there we go. Now we still got our bias for the day was correct. Still going up. Oh, I missed it. There's your fair value gap right there. Bang. You get in on it. Consolidation, breakout, breakaway gap, fair value gap, enter. Did you get in on that? Did you take it? Did you take it? Tell me you took it. Gold went to the smelter. Yes, it did. Liquid gold, my friend. Liquid gold. Tell me you got in on that one there, though. Did you see that opening? So the consolidation, we have a breakout above consolidation. So there's your breakaway gap. We get inside here, our fair value gap. We get a return to it right there. That would have been a precise entry for further upside. Nope. Okay, that's fine. That's fine. Yeah, that's yeah, we talked about this one as well. We're arguing one side or the other. Well, it had to go one argument or the other argument, right? So it could have come down. We're correct. Make sure you journal that so you were correct. Don't beat yourself up. We're amazing people. We're geniuses calling the market just the way as we should. And we're seeing exactly what we need to see. So that when we talked about it going up, that's exactly what it did. We talked about it. It could go down. It could have gone in that direction as well. So we're 100% correct. Here's another entry here. Again, premium above hold highs. Don't like that. Give me some discount. There's the range. And I'm a little fussy, I know, but you know, and this may continue running up. You go, Darren, you missed your opportunity right there. But I don't care. 62% comes back into here. Retags this breaker. Last down close candles before run. This would be a 2-minute breaker running above old highs. So if it comes back into here, which is the discount of this little tiny range it just made, I'd get in there. Some people look at this as a little bull flag starting to form here on the 1 minute. Oh, you're watching gold with me. Okay. So I'm looking at this. I want to discount before I jump in on this. Equal highs right here. Body. If it comes back to the body. Yeah. Again, celebrate the fact that you see this. There's that entrance right there, right with precision. Like you're getting it right on the money there to push higher. I didn't want that. Even though it's a classic setup. Break above, consolidation. Consolidation, break above, enter in here. Consolidation on a bigger scale, break above, enter in here. It's all right, we've made some money today, so I'm not looking for getting too crazy and trade hundreds of times in a day. Wait for it to come to me. Don't chase it. Wondering if she runs to 105, 442, like we said earlier from yesterday. Yeah, I agree. Who said it? I agree. That would be that little cluster that we're looking at on the hourly. Right here. Pocket of liquidity sitting right there. And a little consolidation, 50% of that consolidation. I'd like to see it get right back into here, this area here, because I think that on the 30-minute is something. There's a little tiny piece there. What does the 4 hour look like up there? Yeah, the 4 hour is your pocket, right? So if I go here and I move this to here, you'll see that that's the 4 hour pocket drawing liquidity right there. You see that? Let me get this guy out of here. See that draw up there? Order block, watch your order block here. You could just get a big wick. This could turn into another big wick right off this order block here, but I like this draw. This is like the bigger magnet draw on liquidity is up there in the 4 hour. Which, when we come down to our lower time frames, you'll see that that lines up with that little cluster we were just talking about right in here. Right above that pool of liquidity. Strange enough, hey? So we picked the right direction for the day. We had the bias. You're right. It was a lot of cluster, a lot of bouncing around going on inside there. We had a couple of opportunities to get on. We did get a draw back into our inversion. Or no, our fair value gap here. Why did we not take that one? Oh, because we kept thinking it might go down further. Jeepers. Okay, well, that just ran liquidity sitting there inside the fair value gap there to go long. So that's the pocket that we run to. Again, keeping your bias for a long. We could be in on that one. Yeah. I find a lot of people, if you say could, you shoulda, coulda, woulda, that beats yourself up mentally. Don't even worry about that. Should have stayed in it. Pish posh. We got another one set up tomorrow, my friend. We will get it. Better to be safe. We nibbled some money out of it. That's all that matters. Wasn't a lot, but that's okay. Gratitude. Just gratitude. Here's another entry right here. Look at that. Now, does it come back down into here? And give me my 50% now. I want 50% of this range. 50%. We'll get it tomorrow. 62% brings us right to 50% doesn't, it comes inside the fair value gap. Now get underneath this thing, come back down into here. Optimum trade entries are all inside these fair value gaps down below. How long you been doing ICT stuff now? Who said it? So again, look at basic order block stuff. There's your order block. It gets filled, or sorry, it gets validated the moment you get below it. Right there. Candle stopped. We traded back up into it right there. Then we traded to the body right there. They're like overlapping. And now, where are we aiming for? Next order block below. So there's the next order block. That one's been validated. We're inside that one. Now we're looking for run down here, because what's below us? We've come off this order block here, so you got to reach for something, and your liquidity is sitting down in here. You've only been doing it for a month. Well, I love the fact that you see this stuff so clearly, man. Good for you. Holy crap. I love the way you're looking at stuff. You're seeing it. You're seeing your setups. You're looking at the fair value gaps, inversion gaps. You're seeing all that stuff. That's awesome. Good for you. 1 month. Wow. Got to be a young guy with a young brain, or a young lady with a young brain. But I've back tested almost 2 years far. I think I understand it enough. Yeah. 1 month. Man, if you understand it in a month, I've been doing it for 6 years now. And there's still so much for me to settle on. My biggest problem is fighting myself. I understand these charts like nobody's business, but holy, you constantly battle yourself. And I'm older guy, so I wrestle with my own demons all the time with this stuff. So I always get in the way. That's why I developed a bot to trade for me. So it takes the stress out. It finds my entries and trades for me. It manages my trade. It does everything for me. But I've got to find the right setup when to turn it on. And there's times where it doesn't work. Like things like gold, the spread is way too much and it totally screws my bot. But these kind of things, when you have a really tight spread like this, it works really well. Backtested. So I backtested all of 20. You know what? That's really good. When I started out, I went back through the 1 minute and 15. No, it wasn't 1 minute. It was 15 minute, and I checked every 15 minutes for the entire year. In my research, I developed bots that went back, created probes that went back and checked specific things I was looking for. I created bots that I send back in time. They were my like time travelers, and they would go back and they would search an entire field of data, because I was individually counting each one of these blocks, and I would look for this and say how many fair value gaps occur at this time and this date and on days, and I could pull out data charts, and man, it was crazy stuff. And so I developed these bots that would go back and look for specific things at specific times. And a lot of people look at bots as just trading, but I didn't. I created them as data collectors. So I'd send them back in time to look for stuff, and then come back and tell me what they found. And they bring back a whole bunch of data. I put it in a spreadsheet. I start chopping up stuff. So if you use a bot to gather data instead of worrying about trading all the time, you can get specific information that is very clean. And I discovered some super clean stuff. Oh, sorry, I let yours. What I've been backtested. I backtested 2017 and 18. Yeah, good. Now 4-1, 4-2 on Sunday. 4-1, 41, 42. Oh, you're 41. Good for you, man. You're not a young pup. You get it. I work midnight shift, so I'm able to. This is almost 7.5 hours a night. That's awesome. How you get to work. I'm feeding the wolf. Feed the wolf. Oh, yes, indeed, my friend. Yes, indeed. Working night shift. Oh, God. I feel your pain. Paramedic firefighter, night shifts. I've done so many night shifts in my time. I feel your pain, brother. They take a hell of a lot. And you're 40 too, man. So you're going to start to really feel them night shifts on your body. I don't know if you're like me. You end up sleeping, your first couple of days of your shift off. If you're doing it every night, then most of your day is gone. So your circadian rhythm gets all thrown off, and you got to get one of those happy lights for winter. I don't know if winter affects you the same way, but you get one of those happy lights from Costco's and have one of those things kind of brighten your day. Because, oh man, I used to do night shifts up here in Canada in the wintertime up on the oil patch. You get up and it's pitch black. It's dark as hell. And then you go into a clinic, and you'd work in a clinic as a medic for all day, so you don't get to see the outside. Then when you leave for your night shift your day shift to be over, you go home and it's pitch black. So you're literally a 2-week shift of seeing nothing but darkness. And then you come home and you sleep for a couple of days trying to get your rhythm back in. It was crappy. So now we have this slow drift down. So what time of the day is it here? We're looking at 18 now. 18 is a reversal day, a reversal hour, just so you know. 18, 19 start to contradict each other. So 16, 17 are drivers, and 18, 19, I'm giving you some of my secrets here. 18, 19 are reversals. Yeah, 5 nights a week, 8-hour shifts, 2 days off. my 15th year, so I'm kind of used to it. I'm always watching London session. Yeah, I used to love doing that. If you're doing a night shift, you just sit in London and start getting really good at trading London sessions. Not so much. Session caused. Need to retire. Need to tire. Caused. Need to tired. Yeah. I still love looking at London session. There's some really good key hours on London session to look for. Look at London sessions 9 o'clock and 10 o'clock hour. Look at that. There's your 9 o'clock hour down there. See on my bottom of my chart? 9. Look at that low. 9, 10 o'clock on my chart is the low. London, look at that. 10 o'clock. London, 9 o'clock. London, 10 o'clock. London, 9 o'clock. See? I get to work at 11, do FX replay from about 12:30 to 3 a.m., then watch the live London market. Leave work at 7. If tired, I go to bed. I'm awake, I'll stay for New York session. That's awesome. So you you get some really good clean understanding of the London high and low. So you should definitely have figured out by now that the 9, 10 o'clock hour, or depends on where you are. I don't know what part of the country or what country you're from, but if you line that time up and look for those highs and look for a high to run or break out an old high, previous high at a specific time in London, if it's running down, look for these old lows. If it runs them out, you see it pulling back, then reach for the next high, and then look for the lower time frame to get in on something like that. As soon as it runs out that low at that specific time, or runs out a high in a specific time, look for your next objectives to run down. Yeah, I'll still be here. I'm here every morning, Monday to Friday. I try to get in here. Enjoy the stream and trades. Hopefully we have a better market, less chop, quickly profitable. I'm in New Jersey. All right, welcome New Jersey. All right, brother. Well, if you're heading out, you have a great, safe day, and we'll probably see you tomorrow. I think you're definitely going to get your objective hit today, for sure. All right. What are we getting up? 9, 10, 11. So we're getting near lunch hour. So if it runs this, it might run these highs out in lunch hour, I think. All right, man. We'll see you tomorrow. All the best. Thanks for popping by. I'm looking at this here now. Like that right there. If that stays open. If that stays open. Another few minutes for that. Okay, my friends. We nibbled something out of the market today. I like it. It was good. And we're looking for a run up now into our 4-hour fair value gap that we mentioned earlier, which is our SIBI. We're looking for a run above here. We're looking for this liquidity above the market here. So watch for that to run up there for the rest of the day. If this becomes a silver bullet type entry, if you can get back into here, this might be your entry to go long. Stop loss down here, so make sure your leverage is really, really small if you decide to go long. And you're aiming for in here. As soon as you get to that, start taking portions off for sure. Take some portions off. So that'll be my conclusion of my stuff today. It was great having a chat with my buddy there who said it. I love that name. And the other guy who turned up very early was Tam, I think it's Tan. Thanks for turning up, Tan. Appreciate you guys coming in. Share your thoughts. That's what this is all about. That's what the Breakfast Club's all about. Everybody sharing their thoughts. Whether you're a new trader or you're an old trader, thanks for popping in. And we will see you guys tomorrow. This is the ThetaWaveTrader, Darren Hancock. Thanks very much for tuning in, and we will see you tomorrow. Thanks, guys.